Taking exactly 2 seconds to breathe up here before the absolute chaos it was this week. Because if you don't know the liquidity setup I'm about to show you, you're trading blind.
Last week we mapped two massive walls on Palo Alto at 180 and 185. It rallied from 173, smashed through both, and exhausted exactly before the 190 resistance. AMD was the absolute bingo of the week. We projected a flash from 350 down to 314 Fibonacci level. It dumped to 310 in 2 days before rocketing straight back up. And Tesla, we had a bearish trigger only if 370 broke. Buyers defended that 370 level like their life depended on it, pushing it to a 390 close. This is exactly why we trade conditions, not guesses. Enough looking back. Let's map out this week's SPY structure using the options market. SPY just closed its 5th consecutive green week at 721. Think about that, a 15% return in 5 weeks. That is more than the historical annual average, packed into a single month. Markets usually reach their top when the news is perfect, which is exactly why we need to look under the hood. When I analyze the daily expiration for this week, a massive divergence show up. For Monday and Tuesday, call options are practically non-existent. But the put walls, they are massive. Monday has a heavy put wall at 710. Tuesday steps down to a put wall at 705. Wall Street is clearly bracing for a pullback. And looking at the Friday weekly expiration, it gets even heavier. We have two colossal put walls at 700 and 685, each holding over 75,000 open contracts.
When you see this kind of a defensive positioning with no obvious bad news, a correction is highly probable. Here are the scenarios we are trading this week.
For the bearish scenario, the condition is that we reject 721 and break below 720 with volume. The target, a flash down to the daily walls at 710 and 705, ultimately drawn like a magnet to that massive 700 Friday put wall. This is currently just a healthy correction to flash out late retail buyers. However, if we break and hold below 695, structural damage is done. We'll need to reevaluate the options flow entirely. For the bullish scenario, the condition is buyers defending the 720 and push us aggressively above the 721 close. Price discovery into new all-time highs. The market is entirely ignoring the massive put positioning. If this happens, those put expire worthless, but the risk to reward for long entries right here is incredibly tight. Trade this with extreme caution. If that bearish SPY scenario triggers, those are the two exact setups I'm stocking. First is SNDK. It closed the week at 1,187 after jumping 8% on earnings. Implied volatility is through the roof right now, and we are seeing massive core walls forming at the higher strikes. But here is the edge. And this has all the fingerprints of a classic sell the news exhaustion event. When this corrects, it's going to be violent, and I plan to be positioned for it. By the way, on Friday, it actually triggered the setup straight out of my personal playbook. I call it the late day sweep reversal. It is an option strategy that regularly yields hundreds of % when timed right. If you want me to do a dedicated video teaching exactly how to trade it, drop the word playbook in the comments right now. Next up is Carvana. It closed at 382, and looking at the options chain, it just lost its last major core wall. That was its final line of defense. Below that, market makers have built put walls stepped out like a descending staircase at 380, 360, and 350. Here's the condition. We need a decisive, high-volume break of 375, where one last tiny core wall is barely holding on. If 375 snaps, the trap door opens. We ride the flash down to 350, lock in profits, and if 350 breaks, we are looking at a straight free fall down to 300. Now, what if the market ignores those put walls and pushes higher? Money will likely rotate out of overextended tech and look for new homes. That brings us to the healthcare sector. First, UNH. It's sitting at 368 and the weekly options board shows core walls at 370, 390, and 400. If we get a convincing break of 370 early in the week, this stock can rip to 400 fast. UNH knows how to move, so you need to have this on your radar starting pre-market on Monday. Next is Eli Lilly, another healthcare powerhouse. It's trading at 963, and there is only one major weekly core wall left on the board, the psychological 1000 strike. That exact same wall repeats on next week's monthly expiration, which means 1000 is acting as a massive magnet. If it cracks 1000, the path is clear straight to 1050 and 1100. Finally, our weekly crypto play. MSTR is sitting at 177. The weekly core walls at 170 and 177 have already been conquered. If Bitcoin successfully claims that 80,000 level, MSTR is going to run. The next real target is the massive 200 core wall on the monthly expiration. But remember your conditions. You only trade this based on Bitcoin strength. They move together.
Here is a psychology twist for the week. You need to treat the market like a demanding relationship. First rule, if the market says you are wrong, you are wrong. Do not try to argue with it. Pick your battles wisely. Even if your logic is absolutely perfect, if the tape is against you, take the loss early so you can live to trade another day. The market is processing millions of data points at once, moving faster than you can think. Don't rely on your ego to keep up. Set your alerts, map your conditions, and let the system work. And most importantly, listen to the market when it tells you about its day. Even on the boring, choppy days when it feels like nothing is happening, there is a footprint. There are clues. Drop your ego, listen to what the tape is saying, and do not fight the trend. Now, two quick updates before we wrap. The new website is launching very soon. You will be able to join the weekly newsletter and gain access to our private Discord group. Also, the moment this channel crosses 1000 subscribers, I am turning on the cameras for live trading sessions. If you want to be in the room for that, take 1 second to hit the like button and subscribe to the channel. It is completely free, which, let's be honest, is a lot cheaper than your last bad trade.
Until next week, I've been Roy. Have a profitable and green trading week. And remember, positioning first, price second. And I'll see you in the next one.